Hey everyone, welcome back to Corporate Decoder, the place where we dig into the nitty-gritty of corporate filings so you don't have to. Today we're diving into a filing from Oxford Park Income Fund, and trust me, it's not as boring as the name sounds. We'll reveal and clarify the real story behind the numbers. Essentially, this filing is like a financial health checkup for Oxford Park Income Fund, a company that invests in other companies' debts. We are doing a post-effective amendment in simple words. It means that they are updating some exhibits to the registration statement they use to sell securities. Let's get started and see if you should give them your money. One of the main characters in this update is the amended and restated expense support agreement, which basically means somebody is going to pay some expenses or some expenses are waived. Why is this important? Simple, it affects their profit and your dividend if you are an investor. The filing also mentions several other agreements and documents. We see things like the Articles of Amendment, Bylaws, and Investment Advisory Agreement. Think of these as the company's rulebook, its contract with its investment advisor, and how it can change its own rules. It's not essential to know every detail, but it's good to have a general idea. Now this is interesting. The filing contains an undertaking that the company will stop offering shares if the net asset value, a measure of the company's financial health, declines by more than 10%. It's a safety measure for investors. As of late last year, the number of Class A shares holders was 131,000. I shares had 93 holders and Class L shares had 20 holders. Class 1 tend to be reserved for larger investors, so it probably means that most investors are small investors. We don't see a C class. Maybe they thought it was unnecessary. We've got legal opinions from Dechert LT. These are basically expert opinions confirming that certain aspects of the company are legally sound. Nothing too interesting here. As of November last year, here's how they were spending on compliance. Audit fees standard at around $116,000. Audit-related fees totaled near $13,000. Tax fees were almost $14,000, and everything else was at zero. So basically a well-audited company. Let's shift gears to the amended and restated expense support agreement. This agreement says that Oxford Park Management, the advisor, may agree to waive some fees and reimburse some expenses to the fund. These reimbursements are to make sure the company delivers value to their shareholders. It's like they're saying they will only get paid if the shareholders also get paid. The advisor has to pay back the company if it can. There's a bunch of other standard legal stuff here, like promises to update the filing, what to do if the company gets sued, etc. Nothing too interesting, really. So summarizing all of the above, the company is updating their fillings by adding exhibits. The amendment includes multiple agreements, mostly on business operation. The financial reports indicate that they have a clear plan. Alright, that's our breakdown of Oxford Park Income Fund's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.